Namaste students. Let us start with the last chapter of partnership series, that is dissolution of a partnership firm. The word dissolution means when the business is going to wind up, when we are going to close the business activities. So, as per section 48 of Indian Partnership Act 1932, we have got some process, we have got some rules how we have to dissolve a firm. There are various steps which are to be followed if we want to dissolve a partnership firm. See, first of all, we have to prepare a realization account, then a partner's loan account, then a partner's capital account, and then at last we have to prepare a bank account to complete the process of dissolution. Whenever the firm gets dissolved, first of all, we have to make the payment of outside liabilities. Outside liabilities means when we have taken loan from a bank or we have some creditors with us. So first of all, we have to make payment of the outside liabilities. And then we have to sell off our assets in the market, and whatever money we get, out of that money only we have to make the payments. After making payments to all the outside liabilities or the third parties, we'll be making payment to the partners who have given loan to the firm, who has lent some money to the firm. So at the second step, we have to make payment to the partner's loan. Then we have to make a partner's capital account. Why do we have to make a partner's capital account? Just to find out this thing, that how much the partners they owe to the firm, how much the firm owes to the partner, that what amount of money the firm has to give to the partners on the event of dissolution. And then at the last we prepare a bank account just to check how much money has come in and how much money has gone out in the course of dissolution. So dissolution basically means the process by which the firm gets wind up, and there is a proper method, proper way which we have to follow if we want to dissolve our firm. We need to follow the accounting treatment which is given under section 48 of Indian Partnership Act 1932. So let us start with realization account first. See, realization account is prepared when a firm gets dissolved, and we prepare revaluation account when a partner joins a firm, when a partner retires from the firm, or when a partner dies. It means that the first point of distinction between the admission, retirement, or you may say death of a partner and dissolution of a partnership firm is that on the event of dissolution, we have to prepare realization account, but when a new partner joins the firm, then we have to prepare revaluation account. But the nature of revaluation account and the nature of realization account is same. Realization account is nominal in nature. It is nominal in nature. And you know the meaning of the word nominal. Nominal means where debit side will show all the expenses and credit side will show all the incomes. So realization account is a nominal account where on the debit side we are going to show all the expenses and on the credit side we are going to show all the incomes. See, whenever we prepare realization account, the first step is to transfer all the assets which are shown in the balance sheet at the book value. Listen students, we are going to dissolve the firm now. We are going to wind up the business now. So it means that we don't we need not to have assets account in our ledger books now. We don't need any asset now because we are going to sell off that asset in the market. So first of all, we have to reduce the book value of the assets to 0. And what is the process of, or what is the procedure of reducing the book value to 0 is to transfer them to realization account. All of you knows that all the assets are having debit balances, right? So if I want to reduce this value to 0, what do I have to do? I have to credit it. And where I do have to credit it, I have to credit all these assets in this realization account. So what journal entry I am going to pass? Entry would be realization account debited to assets. Realization account debited to assets. The first step is to transfer all the assets on the debit side of realization account. Why am I transferring all the assets on the debit side? Because when I transfer all the assets here, the book value of the assets will become 0. So write here to all the assets which we want to transfer. But please do keep it in mind, note it down somewhere, have some notebook with you, and note down that we are going to transfer all the assets except the few. Few assets are there which we are not going to transfer, that is cash account, bank account and all the fictitious assets. See, I am not going to transfer cash and bank here. The reason is I am going to make a bank account at the last. I am not going to transfer all the fictitious assets here because fictitious assets will be distributed among all the partners in the partners capital account. And you know the meaning of the word fictitious assets. It includes debit balance of profit and loss account. It includes advertisement expenditure account. It includes deferred advertisement expenses account. So you transfer all the assets which is given to you in the balance sheet or to the debit side of realization account excepting cash, bank and fictitious assets. The next step is to transfer all the liabilities. Fine. See, as you have transferred all the assets to make their book value 0, similarly we have to transfer all the liabilities to realization account also, because now we don't need to have liabilities accounts in our ledger books. We don't need them. So as liabilities are having credit balances, if I want to make their value 0, I have to debit all the liabilities. So journal entry, so you can easily guess now, entry becomes liability accounts, all the liabilities accounts debited to realization account. All the liabilities account debited to realization account. But again, you need to note down a few points that undoubtedly we are going to transfer all the liabilities but except the partner's loan account. We just have to transfer the third party liabilities, the outside liabilities like bank loan, like creditors, like bills of payment, bills of exchange, or you may say bills payables. Fine. Or suppose if you have taken loan from any of your relative, any of your friend, so you have to transfer all such liabilities which are outside. Only those liabilities will be transferred to realization account. And when we transfer all the liabilities here, it simply means that the book value of the liabilities has come to 0. And book value means the value which is given in the balance sheet. It means simply one balance sheet will be given to you in the question, followed by some adjustments, and then you have to start the procedure of dissolution. And how? First of all, you have to make one realization account, then partner's loan, partner's capital and bank. Today we will be discussing about realization account only. So the first step is the balance sheet which is given to you in the question. From that balance sheet, transfer all the assets at the book value except the following, like cash, bank, fictitious assets. Transfer all the liabilities at the book value except the following, like you don't have to transfer partner's loan account. You just have to transfer all the outside liabilities. I hope this point is clear. Next is, what do we have to do after transfer all the assets and liabilities? See, I told you that we have to make payment to our creditors. But how is it possible? It is possible when we have some money. And from where we get the money? We get the money by disposing of these assets. By selling off these assets, by realizing these assets. Realizing these assets means selling the assets in the market and to get money. It means now we have to sell these assets in the market. And whenever you sell assets in the market, obviously you get money out of it. It means you will get some income. And now as per the rule of nominal accounts, all the incomes should be on the credit side of realization account. It means whatever money you get after selling, all the assets will be written here, like by bank. You will write here bank. It means entry becomes, as you have sell all the assets, money come into the business. So bank account debited to realization account. Bank account debited to realization account. And now what do you have to do? You have to make payment of the liabilities. Now see, you might have observed one thing. I have not used the word of any asset here. Otherwise you know that if I give you one transaction that you have sold the machinery, then the entry you pass is cash to machinery or bank to machinery. But here you are selling all the assets, but still I have written the word bank to realization. I have not used the word assets. The reason is all the assets you have already transferred to realization account, making their book value 0. Now I don't have assets in the firm, like in the written form in the firm. In the balance sheet of the firm, I don't have any asset now. That's why instead of using the word bank to assets, I have to use the word bank to realization. Because after shifting all the assets to realization account, we have made their book value 0. Now, after getting the money by selling all the assets, what do we have to do? We have to make payment to all the outside persons. We have to make payment of all the outside liabilities. Now, making the payment means expense for the firm. Expenses for the firm will be on the debit side. So, I'll write here to bank account. This to bank account shows payment of liabilities, and here what I have written bank account, it shows assets realized. Got it? And after selling off the assets, after making payment of all the liabilities, we might be left with some money, which is known as profit or loss. Because you know very well that realization account shows all the incomes and the expenses, and difference between income and expenses, profit or loss as the case may be. So it means that in this question also, after selling off all the assets and after disposing of all the liabilities or after making payment of all the liabilities, we will be left with some money, whether a profit or a loss. So ultimately, we have to transfer that profit or loss to all the partners. I hope this point is clear. That first of all, we have to make one realization account. This account is prepared so that we can start with the process of dissolution, so that we can record how much money we got after selling off all the assets and how much, what amount we have paid to our outside liabilities or to outside persons. So this account is nominal in nature. The debit side shows all the expenses and the credit side shows all the incomes. Now let us discuss some important journal entries before making realization account. See, posting in realization account is not a difficult task. The difficult task is to understand when, how and by what amount we have to debit or credit realization account. Passing entries is of foremost importance. Posting them into ledger is second step. Got it? So let us discuss some entries first of all. The first entry is for assets taken over by a partner. See, when a firm dissolves, at times it happens that a partner requests the firm that please let me allow you to take this asset home. I want to take this asset with me. Then in that case, what journal entries are we going to pass? You know that partners is a personal account. So entry which we are going to pass is partners capital account will be debited as he is going to receive the asset to realization account. Partners capital account debited to realization account. Why are we debiting partners capital account here? That first of all, he is going to receive the asset. Secondly, his claim in the company would get decreased. What do I meant with this statement? Claim in the company get decreased means you know that if you as a partner invest some money in the company, then for what purpose? You know this thing very well that when the firm gets dissolved, you are going to get the money back which you have invested. It may be less than what you have invested or it may be more than what you have invested. So now what are you doing? That in return of that money, you are requesting the company to give you an asset. It means जितना money आपने business से लेकर जाना था, उसका कुछ portion क्या हो जाएगा? कम हो जाएगा. That's why we are debiting here partners capital account, and entry is partners capital to realization account. Now, supposedly you requested one of your partner to make a payment of a liability on your behalf. You said, fine, you please make a payment of so and so liability on our behalf. Then what entry you are going to pass? That is realization account debited to partners capital account. Realization account debited to partners capital account. Now here, why have you credited partners capital account? The reason is because cash has not gone out of the business. Rather, you have to make the payment of or you have to give this money to the partner later on. You means your firm is not going to make the payment. If the payment is made by the firm, then you would have passed the entry realization to cash. In this case, now the payment of this liability is made by the partner. It means that on the behalf of the firm, the partner is going to make the payment. Then later on, the firm will have to reimburse the money to the partner. It means that partner's claim in the firm has increased. Earlier you have to give him only capital, but now apart from capital, besides capital, you have to give this amount of money also to the partner, because the partner has given the money which should be given by the firm. So the entry is realization account debited to partner's capital account. Come to the next entry now. I'm hoping that you all are writing these entries also. Do write it, because otherwise you won't be able to understand them later on. Read the next transaction, that is when a creditor accepts an asset in full settlement. You might have heard about barter system of exchange. Barter system of exchange means when one asset is given in return of the other asset. Right? When you are getting something, an asset or a thing, and you are giving another thing for the same. So now what is happening here? A creditor means a liability for you, accepts an asset in full settlement. What he is saying that, okay fine, accept money, or apart from money, I'm not interested in taking money from you. In lieu of the money, give me an asset. So what do you think? That should we pass any entry in the books of the firms? I don't think so. The reason is clear. The reason is crystal clear, that neither the money is coming in the business nor money is going out. The word full settlement is mentioned here. It means that the creditor accepted an asset in full settlement. Then in that case, you are not going to pass even a single journal entry for it. But if these two cases are given, read the statement. A creditor to whom 10,000 was due. It means that the firm has to make payment of rupees 10,000 to the creditor. Accepts office equipment worth rupees 8,000 and 2,000 in cash. What that creditor said, that fine, your firm has to give rupees 10,000 to me. Instead of giving me rupees 10,000 in cash, you give me an office equipment whose cost is rupees 8,000 and give me the balance in cash. So now you know it very well. Try to relate it with the previous topic, that you are giving an office equipment to the creditor of rupees 8,000. It means neither cash of 8,000 has come in nor cash of 8,000 has gone out. So no journal entry will be passed for this 8,000. But as you have given rupees 2,000 to him in cash, so for this you have to pass an entry. And what that entry would be? Entry would be realization account will be debited. Why? Because you are making the payment to the creditor. It is an expense for you and we have to debit all the expenses. And we have to credit here cash account. The reason is because cash of rupees 2,000 has gone out of the firm. And as per the rule, debit what comes in, credit what goes out. So entry will be realization to cash account 2,000. But no entry for this 8,000 will be passed in the books of accounts. Now move to the next point. Creditors worth rupees 90,000 accepted a building of rupees 1,20,000. Now in this case, what is happening? This case is opposite to the case which we have discussed just now. Here we have to give rupees 90,000 to the creditor, but we are giving building of rupees 1,20,000 to him. So this is crystal clear that we are not going to pass the entry for giving building to the creditor, because in this transaction neither cash has come in nor cash has gone out. But you have to give only rupees 90,000 and you are giving him a building of rupees 1,20,000. So in this case, it is the responsibility of the creditor to return the extra amount to you, and the extra is 30,000. So in this case, creditor will give rupees 30,000 back to the firm. So entry will be as cash will come into the business. So cash account debited to realization account 30,000. I hope this thing is clear. Here we are giving him the office equipment, but the cost of the office equipment is less than the amount due to him. So for the balance amount we have to make payment, and while making payment cash goes out. That's why cash account is credited. But in this case, in the lieu of his dues, we are giving him a building, but the cost of the building is more than what actually is due to him. So what do we have to do? We have to get the extra money back from the creditor, and entry will be cash account debited to realization account 30,000. I hope these entries are clear to you all. Let us start with the next entries. These entries are very important, students. So I would request you all to take out your notebooks and write the transactions so that I can explain you all the entries. See, whenever we want to dissolve our firm, then as I told you that we need to sell off our assets, we need to make payment of liabilities. So for doing all these things, so for selling off the assets or for making payment of liabilities, we always appoint a person. Either that person can be from outside the firm or a partner can also do this thing. So in that case, what happens? We need to pay some remuneration to that person who is performing this task for us. Got it? So, and secondly, when we are going to dissolve the firm, then obviously we have to incur some charges also. No, if I want to sell off all my assets in the market, then what do I have to do? I have to transfer all the assets to the marketplace. I have to incur some transportation charges, right? So now as we are going to dissolve the firm, I can't open a separate account named transportation charges account. So what do I call all such expenses which are incurred in the process of dissolution? Such expenses are known as dissolution expenses. We call them dissolution expenses. So now let me take the very simple example, and I request you all to please note it down. The first transaction is when expenses are paid by the firm. When expenses are paid by the firm. Firm means the business entity which you are going to dissolve. when the firm is going to pay the expenses, then entry would be very simple. First is you have to debit realization account. You know the reason for this very well. It is an expense, and then realization account is a nominal account, so it should be debited. And as we are making payment of expenses, so money goes out of the business. Realization account debited to bank account. If I say that such expenses are paid by a partner, if you told any partner to make the payment of these expenses, then what journal entry we are going to pass? You know it very well. Just try to relate it with the concept of payment of the liabilities by a partner. In that case, what we did, when we are making payment of liabilities, then also we are debited realization account. And now if I am making payment of dissolution expenses, then also I have to debit realization account. Then, when the money is paid by the firm, we credit bank account. But when the money is paid by a partner, then in that case we have to credit the partner's capital account, who is going to make payment of such expenses. And the reason is clear that when we are crediting partner's capital account, it means that we are increasing his claim against the firm. Now, apart from the capital, we need to make payment of this amount, or we need to give this amount to the partner later on, because on our behalf he has made the payment. So try to differentiate both the entries. When expenses are paid by the partner, then it will be realization to bank. When expenses are paid by when expenses are paid by the firm, it is realization to bank. When expenses are paid by a partner, it is realization to partner's capital account. Now, at times what happens, as I told you, that we request our partner to carry on this process of dissolution, to do all the tasks for us, and in that case, we'll give him some remuneration. So now we are going to discuss some entries which we have to pass when we are going to make a partner responsible to carry out the process of dissolution, and he is going to make and we are going to pay some remuneration to him. Now move to the next case. Read the statement. Realization expenses are to be borne by Ram, for which he will be paid rupees 70,000 as remuneration. Actual expenses incurred by him were rupees 1,20,000. These are going to be some little difficult entries, I should say. You need to understand one thing, girls, that expenses paid by the partner and expenses borne by the partner, they are two different things. If expenses are borne by the partners and expenses are paid by the partners, then in that case, we are not going to pass any journal entry. We will be passing only the entry for the remuneration which we are going to pay to him. Read the statement again. Realization expenses are to be borne by Ram, means he is responsible for making the payment of realization expenses, for which he will be paid rupees 70,000 as remuneration. So this remuneration will be paid by company to the Ram, will be paid by firm to the Ram. So entry will be realization account debited to Ram's capital account. Realization account debited to Ram's capital account, rupees 70,000. Actual expenses incurred by him were rupees 1,20,000. We have given him a fixed remuneration. Now it is the duty of Ram to pay the remuneration as well. So if expenses are borne by Ram, means he is liable to pay the expenses, and he has actually paid the expenses also, then we are not going to pass any journal entry, because now payment of such expenses is doesn't belong to the firm's affair. The firm is not at all responsible for all this. we are going to just pass the entry for the realization expenses which we have paid to the Ram. Now, move to the next case. I request you all the students to note down this question so that it will be easy for you to understand later on. Sham a partner. It means again, just like Ram, Sham is a partner. Agree to do the work of dissolution for which we have allowed a remuneration of rupees 10,000 to him. Expenses were rupees 12,000 and these expenses were paid by Ram by drawing cash from the firm. So now what is the scene? That the work of dissolution has been given to a partner named, let's say, Sham in this question. Sham has to bear the dissolution expenses. We have given him like a remuneration of rupees 10,000 and actual expenses were 12,000 which he withdrew from the firm's cash. Fine. Sham, we have given him a remuneration of rupees 10,000. He has to bear the dissolution expenses as well as he only has to pay. But what he did, that he requested the firm. He requested the firm to pay off the expenses on his behalf. And the expenses were rupees 12,000. So as I told you, first of all, we always have to pass the entry for the remuneration which the firm is giving to Sham. So in this case, entry will be realization account will be debited to Sham's capital account 10,000. Now, what Sham did, he requested firm to pay off the expenses on his behalf. He said that I am not in a position to pay off the expenses right now as the amount of expenses are more than the remuneration which I am going to get. So you do one thing, you pay the expenses on my behalf. So it means that what firm will do now? No doubt firm will pay the expenses on his request, but firm is going to reduce his claim. Now whatever amount that will be due to Sham at the end will subtract this amount from his claim because firm has already paid rupees 12,000 which Sham had to pay. We have paid it. The firm has paid on his behalf. So entry will be Sham's capital account debit. Sham's capital account debited to cash account 12,000. You can see Sham's capital account debited to cash 12,000. I hope this point is clear to all. Now write one more transaction. Mohan, a partner. Please note it down. Mohan, a partner, was appointed to look after the process of dissolution for which he was allowed a remuneration of 18,000. Now in this case, what is happening, that we are giving some remuneration to Mohan and that remuneration is 18,000. So entry is going to be very simple. First of all, that realization account debited to Mohan. 18,000. Now what Mohan is saying, that in that the remuneration, to no doubt you are paying me, but now what I am going to do, he said, now write further, that he agreed to take over stock worth rupees 18,000 as his remuneration. Now he is saying that instead of making cash payment to me later on, see, if the entry is realization to Mohan, it means that we are just adding this rupees 18,000 in his claim. His claim has increased by this entry. Claim, as I already told you, claim का मतलब होता है जब firm dissolve हो जाएगी, firm बंद हो जाएगा, तो partners को जो हम final payment करते हैं, that is known as his claim. So now we have already increased his claim by rupees 18,000 because we haven't paid this 18,000 to him in cash yet. अब तक pay नहीं किया. Now what he is saying, that instead of making giving me cash payment, you do one thing, give me stock in return. Fine. So he agrees to take over the stock. So entry will become Mohan's capital account will be debited, and as I told you, stock account is not existing in the book now. We have cancelled the stock account by transferring the stock to realization account. Now, in place of using the word stock, we have to use the word realization account. So, entry will be Mohan's capital account debited 18,000 to realization 18,000. Please have a look on these entries. I hope this thing is clear. Again, if you check the effect no, you will find that we should not pass any entry at all. Realization debit, realization credited with the same amount will be cancelled. Mohan credited with 18, Mohan debited with 18 will be cancelled. So it is just like the barter system that we told him that we are going to pay you the remuneration. So we credited his account. Now instead of giving him cash payment, he requested us to give us some stock in return. So we are debiting his account. So I hope these entries are clear to you all students. Come to the next topic now students. Read the statement which is given here. An old typewriter had been completely written off from books was estimated to realize rupees 400. What does it mean? It means that a typewriter was there which wasn't recorded in the books. We did not record it, or you should say that the book value of that typewriter has falls to 0. You know the difference between, or you know the meaning of this thing, no? That sometimes the book value may falls to 0, but still the asset is alive, or still the asset is existing in the firm. Got it? So one of the same asset is there whose book value is 0. It means in balance sheet that asset wasn't recorded, but at the time of dissolution we are going to sell off that asset, and that asset is estimated to realize rupees 400 to us. Then the entry would be simple. Estimated to realize means when we are going to the market to sell off this typewriter, we are getting rupees 400. So entry will be bank account would be debited to realization account. 400. If I make some addition here, if I say that Priya, who is a partner, she agrees to take over this typewriter. She said that I want to take this typewriter with me, so but at 25% less price. I'm just making one addition here that this typewriter, instead of selling it in the market, Priya said you give this typewriter to me, but at 25% less price. So now as Priya is going to take over this typewriter, entry will be Priya's capital account debited to realization account. Priya's capital account debited to realization account. Now at 25% less, so take out 25% of 400, that is rupees 100. So she is going to take at rupees 100 less. It means she agrees to take over this typewriter at rupees 300. I hope this point is clear. Read the next statement which is written on the board. Unrecorded furniture realized rupees 5,500. Again, the meaning of unrecorded is that the book value of this furniture has falls to 0. Means after charging depreciation for over the years, the book value is 0, but still in the physical form the furniture is present in the business. So now when the business is about to dissolve, we are going to sell off this furniture which is not recorded in the balance sheet as rupees 5,500. So obviously money will come into the business. Entry would be bank account debited to realization account 5,500. Next, payment of unrecorded liabilities means the same thing, that the liability is not recorded in the balance sheet, but you are going to make its payment. So entry will be realization account debited to bank. Bank will be credited because money goes out of the firm, and realization account will be debited because payment of liability is an expense for the firm, and as per the rule all the expenses to be debited. Last is firm paid rupees 400 as compensation. Very simple, just like the same. See girls, see students, whether the firm pays any compensation, whether firm pays any dissolution expenses, whether firm pays any liabilities, what do we have to do? We always and always have to credit realization account only, because the book value of all the assets and all the liabilities, so we have already reduced to zero. In the beginning only, when I taught you this thing, that the first step is to transfer all the assets and all the liabilities, it means this only, that we are reducing their values to zero and now they are not existing in the books. So when there is no compensation expense in the book, then in that case we have to debit realization account in place of compensation. Here also I have to debit realization account in place of liabilities. So entry would be realization account debited to bank account. I hope all these entries are clear to you. I would like to end this lecture with a question. I am giving a question to you all, so you kindly write it. In the next lecture, I am going to give you the answer of the same. We'll discuss whether you have written the correct answer or not. So please note down the statement. Mohan, a partner, appointed to look after the dissolution, was allowed a remuneration of 15,000. Right, in short, Mohan, a partner, was allowed a remuneration of 15,000. Mohan agreed to pay the expenses. Mohan said, fine, I'm ready to pay the expenses, but actual expenses were paid by Vijay on behalf of Mohan. The statement is, Mohan, a partner, was appointed to look after the process of dissolution. We gave him a remuneration of rupees 15,000. He agrees to pay the expenses also, but his expenses were paid by Vijay on Mohan's behalf. So you have to pass both the entries. We will discuss in the next lecture that what is the correct treatment for the same. So I hope girls, this topic is clear to everybody. As I told you that we have to follow 4 steps: preparation of realization, partner's loan, partner's capital and bank. Though I taught you a little about realization account today, I told you how to frame the journal entries, because posting will not take time. Posting to you people are very comfortable with. Only it is the framing of entries which is a problem. So in the next lecture, we'll discuss how to prepare a realization account and how to solve a full-fledged question. Thank you.